All right, hello, hello. Wait, what? I'm not MIA. No, 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 no. Coffee Nero. It's Monday. You know how the coffee thing goes, right? Yeah. We have no coffee. We do know. We do know talkie, right? Um. Yeah, we're not trying to do this with no coffee. It's Monday morning, right? Yeah. Come on. You know how it rolls. Um. All right. So, Monday morning, right? A little bit of movement over the weekend, mostly pound centric. Nothing else really, astronomically, big movers out there. Some dollar weakness still out there. After Friday, it's funny. The market is, we talked about it earlier in the week, last week, Wednesday-ish time frame, talking about how Friday's number would be very interesting because, when the market gets data that doesn't, it doesn't necessarily support their narrative, they like twist it to where it's like, nah, we're just going to ignore that even happened, right? And people are like, oh, when maybe inflation has peaked, that's it. The Fed's holding back. It's like the Fed's been pretty clear they're going to continue to keep pushing, and that it was going to take the unemployment rate being the employment rate 4.6, and it went down, right? And the market's like, woo, this is awesome. It's like, okay, all right. I mean, the market went nuts. I mean, they're like, that's it. The Fed's going to slow down now, and it's like, and there was something very interesting that I want to make sure that I brought up today. Dropping the boys and Gin off this morning. They had Kramer on talking about how the market was, happy with happy with the data and everything. And what he said was, it's a very, the market, I guess the commentators were like, the Fed, they're going to, it'd be nice if the market would, do this and we could do this. And he's like, yeah, that would all be fine and good. He's like, but the problem is arising now where, what's going to happen is, we're seeing, wage growth not necessarily following, right behind. But the problem is, if the market starts to go back up, right? So the market is obviously, last year was not the best of years, right, for the overall economy. If the market goes up suddenly, right, and we're seeing wage growth slowing down, we're seeing every headline from major companies, they're doing layoffs, right? And people are leaving because they're able to get a lot more money, right? Because again, that's been driving demand is because the JOLTS data, right? There's 10 and a half, it was over 11, but it's, 10 million job openings, but only 5 million people, looking for jobs or, willing to work and stuff. So that was driving that. Now we're seeing wage growth go down. But the problem is right now, we've seen the markets kind of really take a hit back because, again, rising interest rates, inflation, jobs are cutting back, earnings are slowing down. All those things are like, oh, recession, that's all bad. Here's the problem, he said. He goes, if we start to see 401k values start to increase again, there's going to be the illusion of wealth there, which should start people spending again. Because again, when your 401k goes down, it's like, oh, bad year, bad month, right? Everything's going down. But if that starts to go back up, it's the illusion of wealth. So people will start spending again, which again, you think overall that's great for the economy. But here's the problem. That illusion of wealth could also drive inflation higher. And the Fed's already said it's extremely dangerous if we stop and then inflation goes higher, right? And that's one of the things that they are worried about. So I think it was a very, very valid point that, yes, right now people are concerned because you're seeing the headlines, but the market for some reason just seems to be like, bad news. It didn't happen. It's fake news, right? And that's what we're seeing. So I think that was a very kind of interesting stance on it. I think there's definitely some, I think that the argument holds water. And I think the Fed is absolutely 100% aware of that. I don't think the Fed has any kind of illusions of, like I said, they don't care what the stock market's doing. They know what inflation is. And again, if you think that inflation is solved, I mean, go look at prices. I don't know who put it up, but Melissa and I were having this conversation yesterday about like eggs, right? The average price of eggs used to be like $2 a dozen, right? Now it's $3.50. Now, you could say that that's it. All our problems are fixed. Inflation's done. The Fed should stop right now. So does that mean that we are accepting the price of eggs at $3.50 and the prices of meat? Should those go back down to where we want them to be? Gas was taking a little bit of a reprieve, right? I mean, gas was down to like, at least here in the area, it was down to, I think like 289-ish. It may have gone slightly below that. But then magically, it was like a blink of an eye over a week, and we're back up to 350, right? So Are all our problems solved? I mean, are these all the new norms now? Like, are we done? Like, that's it, right? These are the prices we're going to have to deal with for the rest of our lives. It's interesting. They talked about getting it back down to that 2%. And, but the reality is that inflation now permanent? Is it baked in? Will it be here forever? Is the problem solved? And it's kind of an interesting kind of a combination between what the Fed is saying and then what the overall economy believes. So, yeah, still 309 here. So, yeah, I mean, we got down into like the mid to high twos, but then magically it popped and it was like, boom, and went right back up again. It's like, what's just happened here? Right? So, yeah, this wasn't really Cramer saying or doing anything. It wasn't like any type of recommendation, but what he said was, again, it was just more like the, opinion that like the Fed, what would make the most sense? The Fed could never do, right? Just the market doesn't accept it. But it would be great if it is. But he just talked about how difficult of a battle that they're going to have trying to control this one, because it's really kind of like a lose-lose situation for them, is what it was. So it wasn't really, again, what he said made sense. It's kind of one of those things. It's not a recommendation. It wasn't an opinion. It was, if people's 401ks go up, even though we're getting paid the same amount, it is. And we saw it in the past too. When your 401k goes up, you believe that you're richer than you actually are. So, yeah, so interesting. So, where we are right now, and again, you got to kind of agree with them. I mean, and not just that, but I mean, look at this. The greenback sell-off may stall ahead of Powell tomorrow. Powell provides fair balance. We know they're still going to raise it, and Cramer's like, yeah, they're going to do a 0.25. I wouldn't be surprised if they do a 0.5 and then they pause, right? Or they label out what's going to be the next time. That year-over-year number is so misleading. Like, yeah, we're down to 6.5. We got to figure it out. But yet, on a monthly basis, it's still going higher, right? The reason it's not much higher is because we were going up crazily, and we're not going up as much. But again, the catalyst is different, right? Why was inflation going up at such a high rate? It was supply chain. It was China lockdown. It was COVID. COVID is soft. That has nothing to do with the Fed, right? We're not accelerating. If we're accelerating at the same rate, we'd be at like 15%, right? So it's slowing down, but on a monthly basis, it's still creeping higher. Right now, the month numbers are expected to be, I think, 0. I think that's what our CPI is right now. What are they saying? Yeah. So they're saying on a monthly basis it's 0. And a lot of people said December was going to be the peak. But here's the thing. We've also missed a lot of the data lately, right? A lot of the data lately, we're like, oh, it's going to come down. The unemployment rate's going to go up. Well, the unemployment rate went down. So we missed that. What happens if inflation is positive again? What if it's a 0.2, right? Because again, we know that one of the big things inside of inflation is what? Energy. I know a couple weeks ago that my gas was in the high 2s, and now I know it's getting closer to that mid 3s. That would be a price change, which would also add to this number. So could the price of that be, again, the reason why the CPI on a monthly basis is up to like a 0.2? And can you celebrate what the Fed is doing is working if on a monthly basis, again, you expected it to be flat, but yet we're positive yet again? So, a lot to think about there. This week, this is kind of your big news for the week, and it's not a very, very big week as far as sheer volume of numbers, but I do think it's a very important week. And the reason why I say that is because, again, CPI, although it's not what the Fed is, it's not, and we've talked about this for months and months, over a year now, it is not the preferred gauge of inflation for the Fed, right? We know it's not the preferred. They say it every single month, not the preferred, right? But it's the one that the market's like, yeah, look at that, the CPI. It's, it's important, and the market's going to look at it. But again, I can tell you right now, if it comes in and it's like a 0.2 on a monthly basis, the market's going to be like, it didn't happen, whatever, right? Because that's kind of what the market has been doing, right? The market has been very big on this, that it's like, hey, it doesn't matter, right? Nobody cares. Fake news. It's bad for the market. Don't care, right? So, we'll see. And then again, University of Michigan consumer sentiment later in the week. Also expected to be a little bit good, right? A little bit better than it was before, so that's not bad, right? But here's the thing, too. Look at this Australian number tomorrow night. On a yearly basis, they're projecting it went higher. And remember, Australia started to pull back, right? They pulled back and kind of, they slowed down their raises a little bit. And now they're seeing it start to accelerate again. And this goes back to, again, what Cramer mentioned this morning, basically saying that, yeah, if we have that illusion of wealth, if the stock market goes back up and people's 401ks start going higher, they're like, hey, listen, Stock market's up. My 401k's up. I got more money than I had before. So we're in the clear end again, and they start spending. That drives inflation because, again, people are spending, inflation increases, right? All of a sudden, the United States is like, oh, you know what? We did 0.25, but it's not slowing down. We got to go back up to a 0.5. And now we're extending this level of inflation and how much money we're spending in the overall. So, it's a very interesting game and a difficult game that the Fed has to play. And I still think that, again, they could have had control of this better had they actually done what they said they needed to do. We need to come out strong. We're going to front load this, right? And magically, we had to start with the 0.5s and then go up to the 0.75s instead of starting with like a 1 and going from there, right? When we knew we were going to have to. And we're a year later than what we were when they started, right? And we're like, we maybe got control. I don't know what life would have looked like if we got control, July of last year, right? What would that have actually, shown and given us? So, yeah, a lot of fun stuff. Obviously, tomorrow morning, we got some early stuff from Macklin for CAD as well as Kuroda speaking. And then, again, Powell is speaking tomorrow morning. Now, Powell speaking tomorrow morning in a panel discussion, central bank independence and the mandate, right? So, I think this is it's not so much of a U.S.-focused talk and discussion tomorrow morning, but it's absolutely good. Again, anytime Powell says things, it has the ability to move the market. Remember, the United States has a different mandate than most of the rest of the world. The rest of the world typically is inflation. Ours is employment and inflation. So ours is a dual mandate versus a single mandate for everybody else. I don't know that everybody else is really going to necessarily want to. They're not going to just suddenly adopt what we do. And ours is a little bit different of a situation. And I don't know that ours is going to necessarily change. But I do think any comments that he makes will be looked at. And again, maybe people will take that as a hint of what he's doing. But overall, I don't think it's, necessarily a U.S.-specific news release that, you got to be like, hey, you know what? Here's the trading, speech of the day. So I don't think it's one of those things. But I do think, again, anything that Powell says, it could potentially highlight and use the U.S. as an example. But remember, what happens it's like Vegas, right? What happens in the U.S. is not what happens in other countries. They handle things differently in other countries, and it's everything. I forget who the speaker was. That they had somebody on this morning too on CNBC talking. It may have been Gilead talking about now that McCarthy's in, how does that change things, right? And he's like, we always like bipartisanship and this and that and the Inflation Reduction Act, and people are paying too much versus every other country in the world. It's like, well, yeah, every other country in the world has a different system. The government buys all the drugs, so they buy in bulk. Like that's why Canadian prices are cheaper. Companies sell to the government. And then the government's in charge of it, where we have like 6 middlemen. We have 6 middlemen here in the United States, so it's a different system, right? It's like saying, hey, you know what? Everywhere else in the world, they use liters, right? Well, yeah, we use gallons. It's different, right? So apples to apples. But it was, kind of interesting that they brought that up. Over Christmas, what is it? Yeah, so Maryland has a rule that we couldn't do that. I don't know if you guys have Sheetz. Sheetz is like a gas station. It's not one of our big popular ones. They were trying to do like $1.99 gas for the holiday week, and Maryland has a law that you're not allowed to sell gas under the market price. I don't know, some antiquated law or I don't know, some weird thing, but we were all like, wait a second. So they want to sell us cheap gas for like a Christmas present, but the law says you cannot sell gas cheaper than what the market price is. Oh, okay. Yeah, okay. So we actually couldn't do that here, but ours still got down to like I said, yeah, 270, probably down to the 250 mark. So yeah. So, all right. So let's go over the charts. I mean, like I said, the only movers right now are pound dollar and pound yen, right? And again, dollar Swiss bound down 78. That's pretty decent. But I really think this is just a dollar loading up for some news coming out of Powell. So looking at the VIX. So overall, the VIX, we had a little bit of a gap up over the weekend, as we always do. Hasn't moved. Hasn't moved too much, right? It's basically stayed flat from where it opened. And again, today, we look news-wise today. There's not really anything in there. I would assume with all the indices up, the VIX starts to creep back down again. And there really hasn't been any news. And again, I think everybody's still in the afterglow of the news on Friday, thinking that news was great. I don't think the news was great. To me, that says, hey, listen, we're not as bad off as we thought. Unemployment's going down, and they said that they were gonna, have to take that higher and control the labor market. or that they were completely wrong and they're completely inept, which I don't know, may be the case. Or it's not doing what the Fed, again, the Fed is the people that deals with the policy. If it's not right, I feel like we got to fix some things. So that's not moving a whole lot. The dollar, obviously down. We took the big move from Friday last week down. And again, when I looked at that data and I looked at the specific numbers, I took that as this is not bad. This is actually pretty good for the dollar. But the market took that as, this is great. The Fed's slowing down. I'm like, I mean, to me, it seems like if companies are laying off, but the unemployment rate is going down, what the Fed is doing is not affecting companies. Not yet, right? I mean, they're still hiring people, right? People are leaving, but people are getting hired back. So I didn't take that as a bad thing. So, but that's what we're seeing. But again, question is, are we going to start finding some buyers down here? And what Powell says, no, we told you guys we were not only going to go to neutral, but we were going to go beyond neutral, right? That's been said since the very, very beginning, that it wasn't that they were going to go to neutral, that they were going to go beyond neutral, right? So, yeah, if we're at neutral, if we've peaked and we're at neutral, what does that mean? It means we got to keep going, right? And a lot of people, I think, feel that the Fed is done. So I feel like there's definitely the potential here for a nice little pop. So, again, I'm okay with this. Diving down into the Aussie dollar. Now, the Aussie is at, here it is right here. 7 month, it's at, the dollar hovers at 7 months lows versus the Aussie, right? Now, we are up at a big area up here, right around that 69.50 level. We've been there. We've seen some sellers in the past. Now, typically, what happens is when we roll into the U.S. market, particularly on Monday mornings, we see dollar strength. Now, this one, question is, do we set up a trade up here? And I would say, it's kind of, you got to be cautious with it. Here's where the zone is at right now. We're rolling into a U.S. session. It's easy to beat up dollar before the U.S. market is open. Well, the U.S. market is open now. And a lot of times we tend to see dollar strength come in, just like we start to see oil strength come in when the U.S. trader gets online on Monday mornings. So in the overnight, you can see right around here. I mean, again, the European market started as the high, kind of went down, did its reversal at 5:30 like we see, and then we've kind of poised ourselves back up again. So we know that there's big Australia data coming in, and it's published now. Everybody sees it. Everybody is under the belief right now that, hey, listen, the dollar's done, right? That's it. We're not raising anymore. It's time to take a break. But seeing this Aussie number, and this is why I covered it, this is kind of a big deal because everybody's cherry picking the year-over-year data here. You're like, we got to figure it out. What do we do with this one? So there could be an acceleration. So I would say right now for this one, we do kind of need a confirmation. The new session is open right now. So, where we're at with it, I would say I'd be looking for a bit of a reversal. As of right now, it's 10 o'clock. We kind of pulled back and we're looking for it. I would say that there's probably a short trade in the Aussie dollar in the next 24 hours. The way that I'm looking at this one is I won't be surprised if this one is in the red for tomorrow. The question is with the lack of any news today, maybe there's a headline that comes through. Is this the Aussie preparing for tomorrow night? That's kind of the way that I'm looking at this one. With it being really, really high, again, I'd like to find a short. I don't currently have a short right now. I do have a level of risk I can use, but unfortunately, if you look at this candle here at 8 o'clock, it did kind of push it all the way to the top. Yes, there were sellers there, but this zone has been kind of pushed. I don't feel that the top is there yet, right? If we talk about color changes and confirmations of a trend change, there's your red, but the green is above the red, which invalidates the trend change. So right now, we don't have confirmation that trend change is in. We may get it in the next half hour, right? With a 10:30 reversal time frame. We're at the right time. We're at the right kind of mindset. We just need to get the confirmation before we can pull the trigger on it. But right now, my idea for Aussie dollar is that we turn, and this one is about to roll to the downside. Okay, and again, we'll not be surprised if this one is in the red tomorrow. With that said, a lot of this right now is the dollar, but people are going to start looking at that Aussie number and be like, oh, Aussie strength is coming in. So we're either going to see a pullback to prep for that Aussie strength coming in, or that Aussie CPI number is going to be a complete trap. Everybody's going to see that one. The price is going to be really, really high. It's going to come out, and everyone's like, wow, that's super strong for the Aussie. And we're going to watch the Aussie dollar tank back down to the downside. All right? So there's kind of the prep for that one. Now, Aussie yen. Aussie yen, again, kind of the same overnight. We started up a little bit high. We kind of pushed back down a little bit. Again, this is, I would say probably more yen than anything else. It's okay. This one was really kind of hard last week to find great levels off of. Right now, my thinking is kind of the same. I'd like this one high. I kind of hope it goes high, so it's an easy short tomorrow night. But right now, there's a decent little base here, right around the 23.6. But besides that, there's not too much. I mean, there's a small zone up top. If I mark off levels, this was an old 78.6. You can see that's what we bounced off of. And again, you guys know I don't like the 78.6 too much, but again, very strong movement off of that. Had you taken a trade this morning, here, I'll just delete this just to make it easier so you can see it. Had you taken this short, it absolutely triggered, right? This is where your 1 to 3 is. It's not a horrible position. And again, it went about 2/3 of the way through, and it probably will still continue to push down. The only risk in this one is that we had a U.S. session coming online, right? It was a weekend. There wasn't a whole lot of, there wasn't a lot of extra effort kind of backstopping that one. And again, when the U.S. session pops online, it's kind of like a whole new day, right? Because again, we're overnight. So again, trade you should be in or could be in, absolutely, without a doubt. Do you get a little bit nervous here around the U.S. Open? Absolutely, because of the yen proxy on there, and you're seeing it start to rally up. You're locked in. I mean, if you're short of this trade, absolutely lock in some profit. At this point, drag your stop loss to like 91.70. It'll bank at 10. Bank at 10 on there. Oh, it's Kip banging on the door. I'm like, what the heck is that? Again, make it a free trade no matter what. Comes up and gets you. Get 10 pips out of it. Otherwise, just leave your stop, your profit target on there. Again, the opposing side of this one isn't until down here at 90.96. So you got some room to run. And again, with a little pop from 9 to 9.30 up, be nice if this one just continues back down and give it absolutely a trade. And again, if you were here last week, this is an easy one. I mean, this is so much movement off of it. Again, love the movement. Don't really care about the 78, but there are people that care. So it adds just another factor on top of it. So that's what you have going on with Aussie yen, euro dollar. So as you can see, there was a little bit of a fake out right here on Sunday night, and then a lot of pacing back and forth through that 78 number. Again, had you taken that one short, this one is a little bit harder, right? You may have gotten stopped out on this one. And again, this was not as good. I just, here is the base, there's the touch, there's the touch, there's the touch, and then it finally collapsed. So it was not necessarily a high quality level, and that's why we had left this one in the yellow. It did break through the top. So again, we can erase this fib level. As far as targets to the downside, you can see we had a Harry Potter, and you can see this is awesome. I love the fact that, Friday morning, we kind of pierced in. We started the base in here and then just kind of peaked below it and stopped. This is awesome. So I'm looking for this one. I do like this one for later in the week. I say later in the week because, again, I do think this will, I don't, our problems may be, while we think our problems are fixed with this one, I don't think, if we're done, the euro is also done. And I don't think anything is particularly great for the European Union. I still think they're far behind, and they still have some of the same contagions that they had anyway. So, we'll see. All right. But nice thing is we can remove this, right? We can set this one up for the new week. Let's grab some fibs on this one and see where some pullback levels are. I do like this big racetrack over here. So this is bad, or this is nice. Bad for if we come through. Probably somewhere in there. I kind of like the test on that one. What I don't like about this one is there's a nice level here confirmed. That's good. But then there's these two little levels. It's like, oh, that could be the bounce. That could be the Harry Potter bounce error level, actually. You know what? Let's leave that there. The bounce may come through, and we may get like a push through, and it may find people here, and that may be where we get the kind of little kick up at, right? Could be in this level. So let's leave that there. We got some space. Let's see. What do we got? 87 pips. So it's not in the next day. So yeah, once dollar strength rolls back in, that's where we can really get an idea on that one. And again, I like this one. So this will be on there for a while. We're gonna hold this one next time it comes down. I love the confirmation that it peeked its head through twice. Love that one. So right now, let's pull this up. We'll go 4 hour. This is what we're playing with right now. All this in here. And again, this is, again, 3 hits, so I don't love it, although it had great movement off of it. But no, that's what we're flirting with right now, right? A 4-hour level of sellers sitting right above where we go. So, can it pop a little bit more? Sure, I could. But just know we definitely have confirmed sellers right above where we're at. So I'd be looking for more of a confirmation. And kind of the same thing we talked about with the Aussie, right? If we can get that red, green, red, right? That's a confirmation that there has been a trend change. We don't have it yet. We still have green, going higher. But, is the European Union the strongest of everybody, right? No. And they've already said that they are going to, maybe have one more and then they are done. The United States has at least one more. And even Bostic said that, we have a couple more raises to go. Not that I put a lot of, I don't put a lot of water into that cup. Bostic is kind of all over the place. All right. Euro pound. So Euro pound, nice little pullback. We called about this one dropping down on Thursday, and you can see Friday morning it did. It came back up and ended up needing that upper level, and we just left this here as an area where we're kind of using as the top end of the curve. You can see it pop through, and we didn't update it higher because it'd been here so many times. But it's really just, again, the channeling that we saw sideways, right? So Friday it did. It came back down again, and we'll see if we're over there tomorrow. But it did find buyers. I like this one where it is. I think it's important to kind of point out from where the Friday was to the low right now. You can see that, again, there's not really a level that we can trade off of. I'll remove this so you guys can see it. But we may be getting a new kind of base in there. I think the level down low, it's an important one to kind of point out. Would I take a long off of it? It's hard because if we go back and look at history on this one, you can see that there are definitely buyers in this level. If we wanted to kind of bracket those buyers, you would have to say probably there. And you can see that's exactly what we ran into. So it's a level to watch out for. Am I looking at this? It's like, yep, we're going long for that one. I'm not quite sold on that one yet. If you are going to go short anywhere in here, and again, it did not hit a 50, so unfortunately, anybody that was trading 50%, you missed that one for entry. If it does boil back down, which, in all honesty, and I don't know why, I am definitely more bearish on the euro right now for some reason. A lot of the charts, when I look at it, it's like, oh, it's a euro one? Yeah, I don't know why I'm bearish on that one. I do think that this one comes back below, and I think we test that level again. I don't necessarily, as I said, I don't really have a level of risk. You could, I don't know, how much is it? I guess it's only 10. I guess if you were waiting for this to pull back, saying, hey, listen, I could see that, right? We pulled back and we're going to drive lower. 1 to 3 is only right there. That's 10 for 30. It's not really a bad little trade setup. So again, if we base here and pull back again, that's not a horrible setup, right? Again, the explosion off of it isn't bad, but there are some 50% sellers in there as well. So, not a bad trade. But again, I'd like to see it base a little bit. And then, obviously once the European market is over, I think that could continue to roll down. I don't think that's bad. I don't mind that one. So nice little, again, if you need something for the small for day, a little 10 for 30. So Euro yen looks much like the Aussie. Again, we talked about a Harry Potter level when we finally do break. And again, I like this one. We hit it once. We came down, hit it again. Kind of bounced a little bit higher, but then went lower here again, saying we're eating up. Like basically right now, we know we have this level right here. Right, I'll change this to purple so you guys can, see what I'm talking about. Again, it violated a zone. It came back and it used that zone. Great. Harry Potter trade. We talk about it all the time. Love it. Right? Came back and used it. But then it touched it again. It touched it again. And it touched it again. So, here's arguably 3 hits, 4 hits right here off that test. Typically, those will break the next time through. And we know we got this nice little punch here. So, this trade is still somewhat valid from last week. Again, it could potentially Harry Potter off of that, not the yellow, which if it does, it's not much different. Right now, we're using the old violated level, and what we like to do is we look for the more near-term basing level. Well, there's your basing near-term level, right? 1, 2, 3, 4. This is what it could look like. So I think either of these two, when we come back down to this level, there's your 1 to 3. That's actually a little bit deep. Your 1 to 3 is right there. Right? So 2 kind of setups in the same geographical location. What I would say right now is if you know how to set an alert for yourself. Put an alert, and we'll add an alert. Whoops. Why is my alert not popping up? Okay. Obviously, I must be logged out, or I cannot set the alert for some reason. I don't know. Do I have too many alerts? I don't know. Why is that going like that? I don't know. Anyway, set an alert down there. We'll just put it over here. Actually, you know what? We'll just move this one up. 140 flat. Set it for 140 flat. Right there. Set yourself an alert. When you come through that level, again, look for it to come in base. As I said, 1, 2, arguably 3, and 4. It should be breaking the next time it comes through that level. So keep that one on your radar. Break of 140 on the euro yen. Looking for that one to come down to 139.11 there. Again, this may be a little bit deep. I think we want to get profit on this one before we hit that level. Okay. All right. Pound dollar. So pound dollar. We are raising up. So last week we talked about potential levels down here, and we did. We kind of got the base through. We went through this one. Let's just clean this one up because, again, we weren't here for it. Again, there's the base. We talked about a break above. Let's pull this. Let's pull, and we'll just, you know what? Let's just pull it. I'll pull this low. So we talked about this last week as we continue to drag things down. This was a level we've drawn for a while. We had a nice push off of it. That happens to be the 61.8. Now, we talked about in the U.S. session, we tend to see dollar strength come in. Right now, again, we're approaching that 10 o'clock, 10:30 time window. We're getting really, really close to a 61.8 window. Now, this one is about 31 pips, so it's a little bit bigger of a trade, but it's a level that we had basing, and we had a quick spike, and it turned and rolled. Now, that wasn't a 61.8. You can see, actually, when we were over here on Friday, it was kind of there, but we've had this zone drawn for a while, right? Actually, this push was this morning. Oh, no, that was last week. So that's where we're at right now, and you can see right now it is front running on the 61.8. So I think this is a pretty decent level as well. This would be, again, a little bit larger. You may have to make yourself have a little bit smaller of a position size, but I'm okay with this one. Again, as we start to roll over at the end of the European session, this one matches 10:30 reversal, end of the U.S. session, or end of the European session. And again, this session started here, went down, 5:30 reversal up. And again, U.S. session has continued with that trend. So once the Europeans are out, we could see dollar strength come back in, as well as you'll have 61.8 traders get in this one. So not a bad little one, but again, a little bit bigger. 30 for 90. That's what we're dealing with. Pound yen. All right, now pound yen, where this one is, you can say it's like, woof, where you're calling for some pound weakness. Look at this one already. We're already seeing pushing here. So we broke out of this trend here. Let's pull these from last week on Friday. Again, we don't need those. And the 160 level, you can see we based on the 160 level. Yeah, we'll hold that one. So we just went to the 78. This is what your top looks like. Right there. I don't need to do this purple. We'll do it in the yellow. So same thinking. Is it a level? Sure. It kind of went off the 78.6. Again, the pound dollar, pound yen are kind of both in similar situations. This one does have a confirmation off it. So we do know there's sellers there. So for the same kind of rationale of why, TradingView, I know. Yeah. Sometimes, I got to admit, when I first looked at TradingView, actually, if you guys remember Rob, I haven't talked to Rob in forever, actually. He got real busy. Rob got into like online marketing, and then he really he really loved it. It became like a passion for him. He loved trading, but then when he found online marketing, he really, really, really got into it, like really big. And actually doing like marketing for like real estate companies or whatever. So I haven't talked to Rob in forever, but yeah, he found this little niche of his own and got into marketing for like realtors and stuff like that. And during COVID, it like blew up on him. Like he absolutely loved it. But Rob liked TradingView, and I hated it back in the day. Yeah, I just didn't like it in the day. I've gotten more used to it. There's definitely some quirks with it. It has gotten much more user friendly. And it's got, like any trading platform, it's definitely got some bells and whistles. I do, for an online platform, really like it. For the fact that there's a lot of online trading platforms, but there's a lot in there that I just don't like, and it's kind of junky. I do think it has great potential. It could be better. There's definitely things, like I said, Pine script is still behind. I mean, even things as far as, the meta language, it is definitely behind. But at the same time, because it is newer and it is gaining more traction, and there's more brokers that are filtering into it and things like that, I do think it actually has a bright future ahead of itself. I think my opinion is with TradingView, I think TradingView is kind of like what MT4 used to be, right? And again, I do believe my opinion on something like MT4, I mean, it's obviously the most used platform in the world. Again, the way that it was licensed out and everything, TradingView is taking I kind of think of it as like an MT4 2, right? If that makes sense, or an MT5 too. I do feel that the way, and again, my dad used to work for IBM. He always said this. He said eventually, like, PCs will just be throwaway. It's not worth upgrading PCs. Just go buy a new one. And it's like anything else. The way that people, the way that anything is built now, they're all built to die, right? It used to be if you bought a refrigerator in the 70s, it's going to last for 25 years. You buy a refrigerator now and get 5 years out of it, you're doing pretty good, right? I feel that the online platform, not having something that you physically have to be restrained is kind of where it's at. Even so much, I mean, look at it this way. Even if you have a phone app, right? Your phone can get stolen. Your internet can't get stolen. I mean, I guess people can hack your passwords, but I mean, obviously things are getting better with that, right? But you can't hijack. I mean, I guess if they crash the whole net and then we have like a Cyberpunk 77 situation, right? Where there's the old net and the new net. I guess that could happen, but then we got plenty of problems. But I do feel the TradingView is kind of the idea of this. Again, as this gets better, I think this is where, let brokers be brokers. Let them be the ones that clear the trades and stuff like that. Let somebody external like this kind of deal with this. I think that's the best idea. And that's what MetaTrader always was, right? MetaTrader was an open source platform that brokers could license and use, and they could make tweaks to and stuff like that. TradingView is not letting people make tweaks to it, but again, it doesn't have the community or infrastructure yet of like an MT4, but I think it'll get there in time, right? I think it'll get there. I mean, hopefully the tools get more powerful. I'd love to have, if I could have the indicator over there, that would be like all I need for 2023, right? If we could bring the supply and demand indicator over there. And people keep telling me we're close. We're close. Before when we originally started doing it, we could get about 25% of the functionality in there. And it was kind of like, do we just do it with the 25 and deal with the 25? We could make it work. And now we're farther ahead than 25, not quite to where I'd like it as a minimum. Like I said, I don't need all the bells and whistles, but I'd like to have some of them. And I don't have many. So, yeah. So we're close. But anyway, pound yen. We're in an area where this is where reversal's coming in. It matches on the pound dollar right here, as well as it matches on the pound yen right here. So, and again, this is the zone formation we're looking for. A nice top, right? This is a great candle to form a level off of, and bam, there's your confirmation. So, this is kind of what we're looking for. Again, it's also 30 pips. So, just in general, this is the kind of zones that we're looking for. I mean, this is, and again, look at this. This kind of matches on a lot of great things here, right? There's a lot of good things here. One, it's a confirmed level formed at a reversal time. Gotta love that. It's 10:30. It's at the U.S. reversal time. Gotta love that. It's 1 to 3 happens to hit right at 160, which we know is also an important level. So there's a lot of things you gotta like about this trade. The pound dollar also showing us a level of reversal. So yeah, a lot of cool stuff in this one, right? A lot of good things going here. So again, if you're looking for a trade, there's 2 different pound trades in there. Dollar CAD. So dollar CAD pushing way down. We talked about this one last week too, that we'd like to get a base and a pullback, but this one just may slice right through because, we said there could be the level here or it could be this level. And we said, hey, listen, if there's your base, there's one, there's a deeper touch. This is number 3, but oh God, it may just go. There was your go. It went down. It came right back up in the next candle. And again, not necessarily the rules, but we're like, oh God, this could be big. I mean, just if we slice through it, it could go quick. And it did. It sliced right through. Went past our profit target. We talked about some levels down here. But really 133 was kind of what we were looking for because again, very, very choppy down here. So yeah, if you grab this one, again, we talked about it. It kind of did the alternate, the more aggressive stance on there. If you had played this one by the book, you wouldn't have got the base and the pullback. But we had mentioned that, again, this is kind of what we just drew, that there was a base level in front of a zone, and that's kind of the same thing. So, yeah, I'm sure some of you guys got it out there, but just with the same slice through. But we're going to, again, we talked about the break below, and it did the same thing. It sliced on that. All right, let's clean this one up just so we can redo it for a new week. Does it change much? A little bit, not much. I was trying to see if that would change anything around the 50-61.8, but really it's kind of covering both. The impulse correction move is literally covering the entire span between 50 and 61.8. On this one, we just had a bounce. I don't know. I'd like to see some dollar strength coming back in. It is obviously a turn this morning, right around that 8:30 time frame. But if you're looking at oil, it was up 3.5, 3.46, right? It's up $2.50 today. That's bringing strength in. So, I mean, yeah, there's some dollar strength pulling back in, but does that counterbalance the U.S. oil strength, right? Because remember we said that the dollar tends to go up, but so does oil, right? In the U.S. session. Hmm. Yeah, my opinion on this one, I think we need to wait for this one to get down to that 33 time frame. We're at 33.72, so I mean there is obviously 70 pips to go to the downside. I think once we break here, we may have a little sticking point around 33.50, but I really think that 133 is kind of where if we can get down to this 133 before Powell speaks tomorrow, I think that could be pretty decent. Um, that could be a news trade for tomorrow, right? Again, we're typically looking at big things. What I say tomorrow at 9 o'clock, right there. So I mean, if we can push ourselves over to there. Now, this is an interesting scenario too. Oop, not purple, blue is fine. There's start a U.S. session, or I'm sorry, European session. Could the Europeans take that and be like, you know what, we're going to front run all this data. We're gonna get in there and make this trade different, right? Before the U.S. gets in, they could absolutely do that as well. Hold on one sec. Who's that message from? Okay. There's a message sent out yesterday. So we have a lacrosse goal that's like old and rusted. Obviously, they rust over time from being outside year round, right? They sent this email out, and they're like, "Hey, anybody that know how to weld, we got to fix a lacrosse goal." Well, everybody thinks I sent the email because it has to do with lacrosse, but it was sent to the entire like 6,000 kid database. So like all these parents, I'm like, I have no idea who you are. Like, I can weld. I'm like, okay. I'm like, what do you mean you can weld? I'm like, wrong person. I'm getting blown up about welding. So anyway, I think 133 is a decent level. If we can push down there before tomorrow, I think either of these actually could be kind of bottoms for things. We'll see if the Europeans take it up. And again, if the Europeans drive this higher, this could be a short for the U.S. When Powell speaks tomorrow. But otherwise, again, I think 133 is a good level, particularly for any like the CPI news this week. So if we can hover around there, obviously large psychological level. And again, it typically is outside the range. I think 135 is the median for the dollar CAD. Dollar Swiss. Again, we're seeing this one continue to deteriorate. And again, it's a lot of dollar weakness. The Swiss from last week. So we had pushed all the way up. We talked about 194. And again, we talked about that bump last week. We don't need to review it again. But we can reverse it now and kind of really start changing that one to the other side. Look at this. 1, 2, 3. There's your 4. There's your base. There's your pullback and drop. So we talked about that. We'll take this and drive this down to see where levels are starting to come in. Let's delete some of these old ones here now. That one was good. Pull that. Just so when we go back, it's a little clear. I don't need that. Let's drop this up to 4 hour. Yeah, so this is what we're running into right now. So we talked about this last week about how the dollar Swiss has been kind of weird because it's like spike down, spike down, spike down, spike down. But we've had so many spikes, and the same thing right here. Like this next level we're about to run into, this one over here at 91.60. You can say there's a level, but that's not a fresh level because these are drawn, and we spiked into it, spiked into it, spiked into it, spiked into it. They're not really fresh. They're not really clean, right? We typically like have clean reversals. We don't have a whole lot of clean reversals down here. So we mentioned this one. I mentioned this kind of aspect last week. Really on the dollar Swiss, what I'm looking for is a nice little bottom. Right? Some type of a confirmation. This one wasn't bad, but the problem is this was the European Open, right? The Europeans set it up. It hit 530 reversal and then just continued the trend back down. Actually, I'm sorry, that's this morning. So we don't really have, again, there's no U.S. kind of assistance in this one. So we need a bottom, right? We need a bottom. And once we get a bottom, that will set up not only an area to go long from, but also a trend short continuation. Now, for some reason, if this is it, if this is the bottom, for some reason, if right now is as low as it's going to go and it turns, this 23.6 level is not horrible. You could draw a little triangle right there. That's not a bad level, but I don't know that this is going to be the bottom just because we don't really have any supporting characters over here. I don't know if we can see it on the 30-minute. I guess we can. You can see this dotted line. There's the dotted line right there. Look at this. Spike, 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 spike. How many buyers can be left down here? Right? I don't think there's too many buyers back here, at least on a technical basis. And again, we're looking for great levels. We're looking for pop, but right now, this is not what we're looking for. So not the ideal opportunity right now for dollar Swiss. I think a couple other positions are in better spots. But again, it is 10:30. We see that dollar reversal coming in. This should be a bottom sometime soon for the dollar Swiss. If we get a green, a red pullback that doesn't go as low, and we see another green, something along these lines right here, just like this, a green, a red pullback. It doesn't go as low as the green, and then a green close above, basically from here to here. Oops. Right. Basically that pattern right there. If we get one here, this should rally back up again. But not there yet, so not much we can do with it. So look for other opportunities. All right, dollar yen. So dollar yen. This trade was out from last week. That was a good one. That's a good one. We'll pull it there. We missed 135. I knew that was going to happen. Yeah, I was looking at that. I was like, oh, we're so close. So close on 135. And we turned and rolled. Let's see. We're above the 78. We can pull that. Let's see from here up. It's not the 78 yet, but I'm not concerned about that. Let's pull this one from here to the downside. Yeah, there's nothing there yet. A little bit over here. It's poor people that traded the 23 on this one, right? Again, this is not a great 23. Some people are like, 23, that's continuation. Yeah. And they're like, oh, God. And then, boom, they immediately got stopped out. Look at this. Right? You knew that this was a good reversal. You're like, oh, yeah, not bad. But again, it had been here. It had already been here. And then, again, this is like the third time the hit came through. Right? And then it did just enough to stop those people out. Kind of in between a rock and a hard place here. I'd like to see a break of this for up. Let's see. 14. 45. There is enough room there. There is enough room for this trade. Yeah, there is enough room for that. And we can do enough yen movement on that one, though. Not bad trade. It's not horrible. I don't, I would say I don't mind that one too much. Could be worse. There are worse trades out there than that one. The 1 to 3 kind of just, it sneaks in, right? So, I mean, it's okay. It gets close, right? It sneaks in. Have to see when that one hits. I don't mind that one. We'll see. How far are we from it right now? About 50 pips. So we got some time on that one. It's not necessarily a near-term proximity trade. So, yeah, I know a guy. Sorry, I just saw that, Sean. I know the guy that has a fridge from 1902. Yeah, 1902. It works great. It's insane. Yeah. I mean, you have those fridge from the 60s, right? And they're literally like like avocado green, and they're ugly as sin, and they don't have like 2 doors or just one big door. I mean, they're tanks. They weigh like 1,000 pounds, right? But they still work, right? You refill them with Freon or whatever the heck it was, right? You pour the asbestos in the back, right? And they still work. Versus like the new fridge we have that like 2 doors has been broken out. I'm like, yeah, it's like 6 years old, right? It's funny. Cars last longer now, but electronics, no, right? Electronics, no, right? And then this is the day and age, again, this is why I'm not an iPhone person, right? I mean, Apple fully admitted to, we send code to slow it down so you buy new machines. It's like, really? And anybody would buy an Apple product after you fully admitted that you send code to deteriorate the performance of them. Right. Yeah. So, I don't know. Just my thing. Anyway, oil. So, oil on Thursday, we had this nice little level. I am really liking the short. I don't know when we're going to get here. Right? Again, I don't have a crystal ball, but I love how this came through. I love how it spiked through here. And I like how it went dink, 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 and it keeps bouncing off that level. Like this one a lot. Next time we break through the 72.85 mark, I like this one all the way down to the 71 time frame. I think there's a lot of reasons why it can happen. It's popping up right now. And again, I think that oil, in my eyes, oil and gasoline is, I don't want to say the red herring because it's absolutely out there, But again, if you think about where all the inflation came from the first time, it came from energies. And we know that energies have gone higher. And it was great. I loved oil down at 70. Like 73 was awesome. I'm like, oh, I mean, I like oil down at 76 where it is right now. I like it compared to like 90 or 85. But the weird thing is, my gas prices are not that much cheaper, right? The last time prices were up at 85, I was at about at 350, right? When it got up closer to 90, that's where I was like, we were pushing like the 380 time frame or the 380 price mark. We're like $10 cheaper than what we were, and my gas is not even 10 cents cheaper. So oil is not necessarily matching up with what gasoline prices are. So I really feel like this is going to be the underscoring red herring for the inflation report. Now, where we are right here, it's kind of like, what do we do with this? I mean, this is a little bit farther away. I mean, I guess if we take the most recent peak and we bring it back down again, there is a level sitting right here. And again, could this be where this triggers? It could be, right? I mean, there's a base. It's at 50%. There's some basing in here, and then it pulled back down again saying, oh, God. It tried to form a level of support right here to drive higher, and it ran out of support fast, and it had to come even lower. Now that that's a little farther away, I think this level here, and let's see, what's the price of that one? Yeah, it's like right at right there, right at $77. So we kind of got a round number right at 77. I feel like this could be a little bit of a trap, right? 77's not bad. I don't mind this one. Like I said, oil's been a strange one to play, but getting short at 77, it's a technical level. I don't mind this one at all. So not bad. I mean, remember, 2023 is supposed to be year of the EV. So, not that we have the rare earth materials, and if we do, China owns them all. So yeah, there's that. I don't mind this one. I kind of like this one. And like I said, I'll be the first one to say I'm all for this one going down. I'm actually I told you guys before, like, we just got a small boat because we got to slip in the neighborhood and stuff like that. And it's not anything big, but we do have to tow it. And I don't currently have a vehicle that can tow boats. So I've been in the market to find something. And again, the boat's not big, but it's an older trailer. So it's a pretty heavy trailer. So like, I can't just have your run of the mill, like, oh yeah, it tows 2,500 pounds. That's not going to work for us because it is an older boat. So it's heavy. We're looking for something. And I'm like, what's it going to cost me gas to drive this vehicle? Good thing is, obviously, working from home, I don't have to drive a lot. But I'm actually looking at, one of the old H2s, right? Because I just need something that literally can tow. And they tow like 7,000 pounds base, like standard. And I was like, that would be more weight. I mean, again, why? If I need to be able to tow like 4,000 pounds, why not get something that tows 7, right? It's the American way. But, 7,000 pounds is a lot to tow. But that's like the standard. Like, you have to do nothing and it tows that. I was like, maybe. So I was looking at like an H2. Melissa's not a big fan, but I was like, what is it going to cost me? I was like, you know what? I'm all for a $60, a gallon gas, right? Or oil, right? I'm all for that, So I'm on team get me to $50. I don't care what you got to do. Get me to $50 in oil if I have to go that direction. So yeah, it's funny. You buy a boat for enjoyment, and then you have to buy a vehicle just to move the boat. So that's how it is. But I only need to move it twice a year. It goes to the slip and it comes home from the slip. It's not even 25 yards from my house, but need that. Natural gas. So why I want natural gas or oil to go really, really down, and I'm not necessarily surprised at the pop. Natural gas is now, again, we were down here. We were at 350. We actually marked 350 off, and we ended up tagging at 8:30 in the morning on Friday. So obviously somebody knew we had that level drawn. Now it's rallying back up again. And I said natural gas was an interesting spot. Natural gas, it doesn't deserve in my eyes to be above 3. 4 is a little high. I get it with obviously the tensions in Ukraine. Again, the cold. Prices dropped down this low because it was warm. And I said, I don't know, Tuesday or Wednesday last week, yeah, natural gas prices are low because, it's warm. But it was going to get cold again. And once it started to get cold again, we expected this to rise. And it did. I mean, it's only 35 degrees or 37 degrees out this morning here. It is rallying back up again. So you expect to see it. Is it 8.4% cold? No. But that's what it's doing. So anyway, we still have a Harry Potter here. We talked about if we could break through 419. We had a bit of a racetrack to fill a gap. So that's still valid. And again, we kind of bounced off of a few times. We may need to adjust this entry just a little bit when we get a little bit closer to it. So it's there. Look for it. Again, if it turns and bounces off of it again, that's even better. It gives us a more close proximity reversal on us. I like that one. So see what happens. And again, I'll move this line off. When we come back up in this 411 to 418 range, see what kind of basing we're getting. There could be a potential long there, but if it does turn and flip, that's even better for a long down the future. And the only reason I say a flip is because we've really had a big push up since the U.S. session opened. Again, we normally see this with oil. We're seeing it with natural gas today too. Again, 8.68 is a lot. Would not be surprised if we come up and hit it and roll. When it finally does break through this level and eats the rest of these sellers out, there is a nice opportunity to take this one long. Now, gold. Gold is high, right? Gold is peaked. We had a reversal point here for news. I can take this one and just bring it up a little bit higher. It doesn't really matter here, right? And again, you can see little Harry Potter. We talked about, again, a few levels here. We based in it, which is what we want. We pulled up. We went back down again. Weekend gap right here. Tagged it, went higher. Perfect Harry Potter trade setup. We are high for gold. When the dollar starts kind of reinflating itself, and again, it could be something that Powell says. It could be the CPI report. I like gold high here because I think it gives us the ability to take a short, okay? Now, gold is one of those things that as inflation is able to rise, gold is a great little hedge for it. They are going to raise interest rates again. They've already said it. We already know what's coming in. The market doesn't believe it. I still think they raise. Now, if they do just the 0.25, if they say we're going to do one more and then pause, I feel like gold will want to rise up. But I feel like where we're at right now, we're very high in the curve. I feel like gold is an opportunity to start selling. And again, we've seen that in the past on news releases. Now, where we're right now, I am a little bit dangerous to draw a top and say 1880 is the top. Look for it to drop because, again, we hit it, went a little bit higher. Now, we're having a very, it's a struggle to go any higher than this. My opinion on gold this week is I feel like we could be at a potential swing trade right now where we take this one lower. But unfortunately, we just we're pecking at the sellers up here. And I feel like because we've hit them 3 times, I feel like we're starting to run out of steam here with being able to stop them at this level. It may go a little bit higher. But my opinion on gold is that as where we're at right now, I feel like we got to be a little bit more bearish. And right now, if you look, gold is up 0.5. It should be double silver. Silver is up 0.4. So it's not at its double status right now, which shows you that there's a little bit of confusion right now with the metals, right? The metals, whether, again, they're hedges for inflation. Silver, again, you're seeing silver. It looks similar, right? You're seeing this kind of like pop, pop, pop. Difference is that gold is high. Silver is a bit of a pullback. And again, that 24 figure. And if you look at silver, again, its last pop was not higher. So silver looks like it's going to be in more of a collapse. There is a basing level right here as well, right? We hit it here. And guess what? We hit it and hit it deeper. There's your 3 touches. We got a little bit of a run to the downside in silver. So, silver is looking like it's got a short. And typically silver is what not dictates, but typically is the front runner of what gold looks like, right? So, they're both, gold is obviously quite higher, but silver is kind of peaked right now. And again, there could be a bit of a short there. So, looking like, both the metals could push back down again. I think that meets the narrative of what we talked about with the dollar. Now, as far as indices goes, again, all up, which I think kind of makes sense right now. Everybody's extremely high, like, that's it. The Fed's done. Look at that. Everything from Friday is good. We're happy. The McCarthy thing, whether you like McCarthy or not like McCarthy, again, it provides some certainty that it is, over. The market does not like uncertainty. And typically the market, same thing with the election, right? Markets were all over the place until it was, didn't matter what direction it was. It was once we know with certainty, now we can prepare. Well, now there's certainty. Now, I will say, I don't know if you guys looked into this or whatever. I don't really care. The Speaker of the House is just, again, it is what it is. I guess there's all types of stipulations in there. Like if one person votes him out, so it's like he's the Speaker, but not really the Speaker. Like you'll be the Speaker until you say something I disagree with. And in this political environment, that'll last what? A week? 2 weeks maybe? The first bill that comes through? So who knows if it's real or it's not real yet. So I feel like I'm not necessarily surprised. Here's your 9:30 pullback. And if you say, okay, listen, where's a level of confirmation? There's your 9 o'clock window. Now 9:50 went up. So this one is a little bit of a fake, right? There would have been your basing level. It's not the bottom, but we definitely based and we pulled back up and then pulled right back down at 9. We did push up, which again kind of signifies we typically like to go in the direction. But there's your touch. There's the same level of basing we had in the overnight. Mondays is always a little bit more difficult as well. But there's your confirmation at 9 o'clock, right? So this one would have been a long, and I can tell you it's definitely out. Right? Definitely out. 1 to 3 is sitting right there. And all we did is we looked for the near-term basing. This is the extreme, but there's your gap, right? There's your pullback. There's your basing level. There's your bottom. Pop. There's your confirmation. There's your up. So what happens with this one? I honestly, if we hit some type of reversal and we kind of pull back down again, makes complete sense to me. Um, I don't think there's really any news today that's going to justify this one way or the other. It's kind of the feel good news from Friday is what I think people like, and as people talk about, the Fed's, we're seeing a crack, we could be peaked. Even if we are just peaked, or even if we're at neutral, the Fed said they're going to take us beyond neutral and then hold it there for a while. So I feel like the market is very nearsighted. Or again, they have selective hearing or selective belief. I don't know. I just feel like they are not fully looking at the market. So if we pull back from now on, again, that would be a decent 1030 reversal. That'd be the high as 1036. So again, I wouldn't be surprised if it comes back down again. But as far as opening print goes, 1-for-1 and 1-for-1 on exits. NQ. So I hate to say this, NQ, you didn't get the entry. Again, we had this. We were driving. We had a bit of a gap here. You can see that it pulled back. Unfortunately, left without us. And the same thinking. So this is, no entry for this morning. But I will say, again, my opinion is the same. It's up the most right now. It is at a level right now at 1030 where we could potentially be taking a reversal. And it got beat up. It's definitely been beat up more recently than anybody else. So seeing it kind of, have a good day today, not surprising. That happens. But I do think when this one turns and falls, the way that it took off today, I think it has the ability to come back down. And, it could be potentially forming the top right now. We have a red. We'll see if this green is able to go above. Typically, the wicks don't matter as much. But we got about 20 minutes. If it cannot break through, if it cannot close above 11,310, it's kind of set up that it's forming a top. So this could be, we know that 1030 is the time when we see reversals. Could that be the top for today? I think absolutely. So again, not opening print. Is it set for a reversal trade? Absolutely. YM. Look at YM. When we clicked on it, oh, there you go. Look, 33,999, right at 34. So YM. Was there an opening print for this one? Now, here's the level, and this is the 930 open. This one kind of had it. If you said, where's the base, you had to look at that level right there. And we did have the confirmation touch at 9 o'clock. It did peek its head out a little bit. This one I wasn't as much sold on because it's like, it's higher. Pulled back. You may or may not have gotten into this one. I don't know if this one was out or not. This was the one that I was kind of like, I don't really love that level. And again, you may have gotten stopped out if you didn't take the entry on the way out. Again, if you took a number 3 entry, basically when it left the zone, that's where you were looking to take it. 1 to 3 is there. So I guess it did. Finally punch through the top. It came up, pulled back, and then finally did go through the top of it. So, again, depending on how you got your entry, I'm sure we can see it on a 5-minute. Yeah, you can see it on the 5-minute. It would be there. So, it was okay. I didn't like this one as much of the two. ES was good. This one was a little bit choppier back and forth and wasn't as much of a fan of it. I didn't really like the zone, how this punched lower. So you could have taken it, maybe not. But it did go beyond its 1 to 3 based off the original entry. So again, had you taken that with something like a Nadex, it didn't matter that it went a little bit lower, depending on how you timed that one with futures. You may or may not have gotten stopped out. Maybe the spread took you out. But if you did get long and it didn't get stopped out, it absolutely went past the 1 to 3. So you would have been done on that one. Okay. Looking at Russell. So Russell, this one also just a little tiny bit deep. And again, it did not touch the low level. This zone right here, you could say that, okay, listen, there's your level of basing, right? We came back down again. This one did not have the 9 o'clock confirmation like the other two did. So it's kind of like, we're all the way up here at 930. Would we have looked at this for an area to go long from? Maybe. It wasn't, you could have said that we had the confirmation down here at 8, and it was okay. Again, this one also went through. I would say that this one is a little bit more challenging. And again, I typically, while we talk about all the breakdowns, there's your 1 to 3. So you can see, right there. It did go past. So again, if you gotten long with it, it went out. ES was really the best looking of all of them. Like I said, NQ, not so much. YM didn't make sense. Russell, Russell's okay. I would say that this was second behind and it did not get, based off the level, it would have been really close as far as if you got stopped or not. So, but again, you're seeing that it seems like it's having some issues right now. And again, at 1040, Russell is one of the weaker pairs. So I think, YM is, again, it's the weakest right now. This turns negative. YM should continue to drop. And what I would say is there's probably a little bit of a Harry Potter trade right here, heading to the downside. NQ also peaking. We're at 1030. We'll see if we can kind of punch through the top of this one. We'll see. It's real close. It looks like it wants to poke through, but remember, we're looking for that close. So the second one of these turns red, we could potentially be getting, again, nice parabolic move up. And ES is also the same thing. So everybody's having problems. 10:30, it's reversal time. Wouldn't be surprised. And again, they can still end the green and push back down to the open. So, all right. With that said, we're a little late today. Let's go ahead and do the drawing. I'm not allowed to mention names, right? Not allowed to mention names, but there is one person in attendance right now that is going for his double, right? His 2, right? Because somebody did win on Thursday. And it is a 50 pip chip day. All right. With that said, is everybody in? Now everybody's in, I think, right? Let's see. Yep. Everybody's in. All right. Let's close that down. Let's do the drawing for the day. Winner of today's drawing is not the double person, but it's a person that, remember, I'm not allowed to say names, but it's a person that pays probably double what I pay in gas. So she needs all the help she can get. Let's give it to her right here. Our second place finisher right there. Marina, what is gas out there? Because like I said, yours tends to be the highest of anybody. Sean tends to be a little bit lower than me, right? Mine is not bad. Those guys in Texas, we don't want to hear because they pay like half the price that everybody else does. What is your gas out there? Because yours is about typically $1.50 to $2 more than what we pay here on the East Coast. 5-ish, yeah, that's what I figured. Yeah, that's what I figured. Yeah, 5-ish, guys. I'm complaining about 350, and she's dealing with like 5-ish, right? Yeah, and California's around the country. So, all right, but that's it. I'm out of here. 259. I wish it was 259. Now we're back up into the 330 range right now. So, It was 260 2 weeks ago. Well, 260 2 weeks ago. So, with that said, I'll be back on tomorrow morning, guys, 9:30 Eastern Standard Time. Good trading today. And like I said, Powell speaking at 9 tomorrow. I don't anticipate any major crazy wrinkles because, again, it is more on a board in Stockholm talking about mandates of the Fed, which is a little bit different. It's more of a theoretical versus, well, in the United States, this is what happens. So, yeah, diesel is insane here. And diesel's actually, it's worse than that. So, it's crazy. So we'll see, but just be cautious of that 9 o'clock release tomorrow. But that happens right before we're on. So with that said, everybody trade safe today. If you need anything, shoot me a message on Discord, and I'll catch you guys later. Take care.